Now here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Coming up, a different force in the energy market challenging the incumbent retailers on their entire business models. We talk to Edge Electron's chief and former Energy Australia CEO, Richard McIndoe. And the bit of the housing market that sees blue sky ahead and is attracting sizable American investment. Ingenia Chief Executive Simon Owen explains why. It is still the world's greatest day. The 11th hour of the 11th day of the 11th month in 1918, the day World War I, the Great War, ended. The first Armistice Day. Well, around the world, streets were filled with hundreds of thousands cheering exhausted citizens. The carnage was unspeakable and unfathomable in today's world as we all roll on with our busy lives. Between 9 and 10 million soldiers lost their lives, over 20 million wounded. 4 years that would hit every single family in a lifelong sentence. Sons or husbands lost forever, or if not, certainly changed forever. The hardship on civilians too was awful. Over 5 million reported to have died from disease and starvation. Remember, the Great Flu, which itself killed millions, had its deadliest month in October 1918. So on that morning of November 11, in the dark at 5 a.m, just outside the town of Compiègne in France, the French Marshal Ferdinand Foch, Commander-in-Chief of the Allied armies, signed the Armistice Agreement in his rail car, an agreement which came into effect at 11 a.m. Australia joined the Great War from the very start, and while Aussies perhaps feel more connected now to that fateful day in April 1915, the Gallipoli landing, we know many more Anzacs later fell on the Western Front at places like Fromelles and Passchendaele. Over 60,000 Aussies were killed and over 150,000 wounded, gassed or taken prisoner, out of just over 400,000 who enlisted and out of a population of under 5 million at the time. The war to end all wars, of course, did not do that. There's no one alive today, I think, who fought in the Great War, but its legacy and the legacy of World War II still stands. It delivered the freedom we all have today, but of course at a terrible price. So for many, many people in Australia, this day, 100 years on, it's a reminder of why we must never, ever let geopolitics run away, as it has in history twice now. And on this day, a very decorated former Special Forces soldier, Mark Donaldson VC, was the first Australian, I think, since the Vietnam War to receive a Victoria Cross for his bravery in Afghanistan. He now works for Boeing Defence Australia as a strategic defence advisor and spends a fair bit of time focusing on the challenges that Defence Force veterans face coming back into the workplace. We spoke a little bit earlier. Mark Donaldson, very special to have you here just in the lead up to Armistice. I wanted to ask you first about yourself and how you feel about Sunday, because here you are, you're a Young Australian of the Year, and then you got the Victoria Cross, and I'll quote, for conspicuous acts of gallantry in action in a circumstance of great peril in Afghanistan as part of a team. Now, how do you see this Sunday coming up?
Well, thanks for having me to start with, Ticky. And I think Sunday for me it's a very special day, particularly being the 100-year anniversary.
Yeah.
The day the guns fell silent, as they say. And one of the things I always try and reflect upon, and I learnt this through my action on that day that I received the Victoria Cross, that there's always this balance in warfare, and especially when we commemorate and we remember those who went away to war. For myself, people see the Victoria Cross and they say, what a great act of courage, or what an amazing act of bravery. Yet the one thing I have to remember on that day is it was, whilst I to a degree get celebrated for that, the other side of that is that was the worst day of other people's lives. My mates who were shot, who will never be the same again. There's families in America, because it was a conjoined US Australian and Afghanistan combined patrol, that was the day that their son never came home. So there's always this balance, and I always try and remember that. And days like Sunday, and especially for this Sunday being so important that it is, that there's always this balance. And yes, it's great that it was the end of the war, but we have to remember as well that there's those that, hundreds of thousands that didn't come home from it.
And the price of that war really is what you're saying. And I
That's
suppose, in a way, we think about the Great War, and indeed other big wars, Second World War and other wars since then, is the price that we have, that, you know, you and I are sitting here with the sort of life that we're leading now. Now, a big part of it for the vets themselves, and we're reminded of this with Invictus as well, is what happens after the army. What was your story?
Yeah, that's right. Well, I think it's one of the key elements out of the guys and girls from World War I and World War II and these other wars is there was a price to that freedom, there was a price to what they did. And the best way to celebrate that I see it, is that we should live good lives. We should drive, we should try and achieve, we should strive to be better. And that's the lessons that I think they give us. And you know, my own story, having being in the military and now transitioned out of the military just recently, it was difficult at first. It was,
What, even
it was more difficult
even
than I
for
thought.
someone like you with that sort of recognition coming into the workplace?
Well, you don't really appreciate, from my experience, was these other thoughts that you're going to have. And primarily for me, it was a little bit of a feeling of guilt. You know, I'm leaving my friends behind, I'm leaving my mates behind, I'm sort of walking away from a family, even though, you know, you're doing more for your own family. There's also this feeling that you lose routine, you lose structure, and unless you put some things in place to balance that out, I think that's where people can get a little bit lost.
What is there on offer? Because in the US, we know there's the GI Bill, and that's an extraordinary bill that offers every returning serviceman, apart from anything else, the opportunity for free education as a sort of jump back into society. What does Australia offer, and what should we be doing?
I think Australia offers quite a lot, and there is a lot of ex-service organisations, and RSL do a lot in this space around trying to transition people from the military. Another way I like to think about it is when you join the military, you'll do 3 months, sometimes 12 months, sort of in an induction period, if you will. Yet when we leave, it can be as soon as 2 weeks, and then you're out. Now, there is a lot on offer, there's a lot there, but you as the individual have to go and seek that out and go and find, you know, those things, those transition
Do you think
seminars,
there could be? Do you think there could be some better transitioning? I mean, there's a new initiative the government's put in, the Veterans Employment Commitment, that's come through literally in the last couple of weeks. Are there? I mean, what are companies? Boeing, of course, does a great deal. Tell us a little bit about your employ there and what you do.
Yeah, for sure. So I think the initiative is great. You know, that's a step towards what we should be doing. And better things like education, better things like getting veterans a foot in the door. You know, companies like Boeing is creating initiatives that will help that transition period, that will connect with the veterans that we have, and also still connect with that veteran community. Boeing in particular, and one of the parts I'm involved with Boeing is that the Veterans Initiative and the Veteran Strategy is really around that internal support with an external engagement, is how I like to structure it. So, you know, helping the ones that are coming to us, enhancing the ones and their experience with the ones that we have. Yes. And then also connecting back to that veteran and giving back to that veteran community.
So being obviously in defence, Boeing Defence Australia, you think that they would have this. I think almost half the management team are made up of veterans. So, I mean, it would make absolute sense that they are a major employer. Beyond that, though, what do veterans have to offer the broader community?
Yeah, I think there's a special thing with veterans, and there's loyalty, there's courage, there's passion, there's drive, but there's also an understanding of compassion. There's also an understanding of teamwork. There's understanding intent, instructions, and being able to fit into a team very quickly, adapt into a dynamic environment. Very hard things to put on paper.
I think that's it, isn't it? And a sort of maturity that they would have from life in the army, but really hard to put on paper.
Yeah, very difficult. And I think it's one of those things. As a veteran myself, I've learnt that just going out there and saying I'm a veteran or being in the military, that shouldn't be an entitlement, and that shouldn't be an expectation that will get you a job. You really have to be able to sell yourself and sell those sorts of soft skills that you've learned in the military to get you above the other people that are trying out for that job. You may have an actual skill, you may have a hard skill as well, or whether it's engineering or software engineering or something like that. But for those of us that didn't or don't, like myself, you need to rely back on those other skills that got you through that job as well. That you
so you were special forces. Does that help or hinder getting a job?
I think it depends on what job sometimes, but certainly with the special forces, there's aspects of what we did that certainly enhanced my time in Boeing in particular already. The ability to listen, the ability to observe, take in what's going on your surroundings and figure out where the gaps are and then how to fill them. For myself personally, I find that part fulfilling in my role, is being able to connect different parts of the business and, in a sense say, hey, you should speak to these people here in the business and vice versa, because it will enhance the business as a whole. Yeah.
So Australia's made up of big businesses that employ people, also an enormous number of small business every day who surround you, who are there potentially to employ people now. What do you say to this question that some employers might have, that vets coming back from war come with, other baggage?
Well, I think there's two parts to that. Not everyone's going to be broken. There's a whole lot of us that actually have thrived from those situations, thrived from high pressure situations. We've grown from those situations and often we sort them out because of that reason, because we were the people that could handle that situation. And then you get the job done. There is the other reality that some people have suffered from that, but it doesn't mean that they're not or don't have the ability to be good at their job. They don't have the ability to fill that role, and there shouldn't be an expectation that we all come broken. I think that rhetoric would be good to see change in the Australian community.
What do you think Invictus did?
I think Invictus brought that to the forefront in particular. Whether it's the physical, what we could see, whether it's a loss of limb or whatever, really brought to the front that these people can still achieve, or it was the mental aspect that, hey, we have gone through some trauma, some of them, but look, they can still achieve. They'll still be willing to get out there and give it a go, give it a crack, and still be there at the end of it, plus that support that comes with it. And for me, I think that was the most telling from Invictus Games, was the support of the community, the support of the companies that got those athletes and those veterans to that event, but also just the support of the family and friends that were around them at the time.
Mark Donaldson, as I say, it's terrific to be able to talk to you. Thank you so much.
Appreciate it very much. Thank you.
Joining you. Great Australian.
Thank you.
He is indeed. Moving stateside now, and protests have been held outside the White House this morning, with dozens of people demanding the FBI's Russia probe not be ended. Concern is mounting over the fate of the investigation into alleged collusion between the Trump administration and Russia, after President Trump ordered Attorney General Jeff Sessions to resign. For more insights into the Sessions ousting and a recap of the midterms chaos, I spoke with former White House advisor Ed Blakely a little while ago. Ed Blakely, you said you would come back in if you weren't crying, so obviously it's not a total downside scenario. How did you see the results?
Well, I'm smiling.
Yes.
And it's kind of like one of those schoolyard picnics where the kids get a race and everyone gets a prize.
Okay.
And so the Democrats got their prizes. The big prize for them was governorships. Those governorships aid in the redistricting. So that breaks a hole for the Republicans, because they gerrymandered. The only place that didn't happen was in Ohio, where the Ohio voters don't want gerrymandering. So it could be, a toss-up there. But in Wisconsin, where the Republican governor was I won't use the word, they knocked him out.
Right.
And that will be big in 2020. If you take Wisconsin, Pennsylvania, again, Democrats. Illinois, Democrats. So you don't even have to win Florida this time around if you've got the right candidate.
So overall, the House...
The House was what I said. I said about 230. It looks like it'll be 230, 231. That's a big swing, when you're behind 15 or 20.
Yes.
And you've got to climb that, and then you get 12, 14
and
more.
your point last week about Donald Trump not necessarily helping things when he did on the campaign, did that pretty much reflected what you were saying, because he didn't get those
seats in the House, but he did in the Senate. And I think there was a candidate quality issue here. Like Donnelly lost in Indiana. Braun was a better candidate in terms of quality.
Right.
The same thing was true in North Dakota. Although Heidi Heitkamp is a nice person, the person facing is a good guy in terms, but he's very far to the right. I'm not saying he's a Trumpy, but he's very far to the right.
And what sort of Republicans got in the Senate? Well,
Mitt Romney, no friend of Trump. Scott from Florida, no friend of Trump. It's out in Arizona, but if the Democrat gets in, clearly, the Republican has had to stay her distance from Trump.
Right.
And of course, Rosen won, the Democrat won in Nevada. So the Senate will not be malleable for him as it was last time.
Yes. Yes. Now, I should just mention Beto O'Rourke. He nearly got there, didn't he, against Ted Cruz? Very, very close.
Oh, gosh. You know, I was up till 3 o'clock in the morning on that one. Beto O'Rourke is such a tantalizing character. I haven't
So where to from here for him?
Well, he's in his 30s. And to run a campaign like that in your 30s, and he may raise $1 million for every year. He is old. I think he has national. It could be he runs again for the Senate, but more likely for the vice presidency.
Ah, okay, right. Okay, now look, we've got this midterms, they're bedded down, but the caravan moved on. There was plenty of action. What did you make of Donald Trump, his action against Jeff Sessions, or forcing him basically to resign? And what does that mean for Mr. Mueller and his investigation?
Well, clearly, this is a move on Mueller. The man who's in charge is not the regular person, the deputy. That'd be Rosenstein. He put in basically the assistant to Sessions, who's already said he's against the investigations, etc. No chance of that man being confirmed by the Senate. So the existing Senate has to move very quickly to stop this. Lindsey Graham has already come out. Jeff Flake is still there. They're going to have to move very quickly. But if they don't stop it, you can bet the next Congress will, and maybe reinstate the investigation. But this time, it will not be about Russia. It'll be about obstruction of justice.
So where does Nancy Pelosi sit now in her deliberations about Donald Trump, do you think?
Well, Nancy is an interesting position. You know, she doesn't have the job yet.
Right.
The newcomers have to put her in, and this is an interesting group of newcomers, nearly 100 of them, 2 Native American women.
Yeah, gosh, and a couple of Muslims.
Yeah. So these are not people who are on Nancy's team. She's a middle-of-the-roader, so she has to get in. I think she'll be able to say, look, give me this first year so I can organize you. And we can make a nice, easy transition.
But what's the alternative, if not Nancy Pelosi, surely?
Oh, geez. If Beto were in, he'd be there.
Yes.
But there isn't. There isn't anybody there who could take the job easily. There are a couple. Maxine Waters has been around as long as she has. But Maxine is too far to the left. She's not an organizer. Maxine's about Maxine. So I think you're right. But there are a couple of younger people, like from California, Swednick, I think he's called, already talking about running for president, but also has good traction among his colleagues. Not too far to the left, but clearly what they call a thumb thumper.
Okay, and finally, the caravan rhetoric seems to have, died down now that the midterms are over. What do you think Donald Trump's next big agenda item is? Presumably, it's to carry on with this free trade war that he's got with China.
I think that will be very high on his agenda, but don't forget about Iran. Yep. And there he can make a lot of noise and do very little. And it looks like North Korea slipped off the agenda, so he's going to get that back on. I think the caravan, you're right. What will happen? What are the things that will happen? There will be an immigration bill. The Dreamers will be first in that. The second is there'll be a health care bill to protect people who have pre-existing conditions. And Trump will concede on those to get the wall, which the Democrats will give him, but the wall will probably never be built because they won't appropriate any money for it. It's all symbolic. No money has ever been appropriated for this wall, and I don't think it's going to be appropriated. Because to appropriate money for the wall, you got to make the debt deeper, and nobody wants to do that.
Well, it's been a fascinating week. Ed Blakely, thank you very much for joining us.
I can go and get some sleep now.
After the break, our great tech expert's perspective on Huawei. The Australian's Chris Griffith next.
You're watching Ticky on Your Money. Now, back to Ticky.
Yes, welcome back. Well, let's get a bit of a tech injection now. The Canadian government last week said it would not rule out Huawei from the construction of its 5G mobile network. This despite our government locally giving the China telco the boot. And a secret report issued earlier this week finding Huawei had in fact worked with espionage services to infiltrate a foreign network. Well, for more on what to make of all this, the Australian's tech reporter Chris Griffith joins me live at the desk. Chris, this is really, hello. Normally we're talking gadgets, but I mean, this is quite a big story, isn't it? It's becoming quite a big story.
It's an enormous story because 5G is going to be, you know, the big rollout around the world in the next few years.
Where money is made from all the telcos.
With enormous amounts of money, and you've got Ericsson, Cisco, Nokia, and of course Huawei is the biggest players in telecommunications. But I guess this has arisen for a few reasons. Firstly, China passed an act of parliament which gave their security forces enormous powers, and that included the ability to require companies and corporations to cooperate.
So what we're saying here is whether Huawei likes it or not, they can be commanded to cooperate in the interests of the Chinese government.
Absolutely, and while there's only been small evidence, or this evidence, that they might have been asked about this,
we talked to Paul O'Malley about this earlier in the week.
Yes, that it does actually burden them with the fact that this act is there as well, because they are put under that situation,
So we've got the Canadians saying, no, come on in, fellas.
Well, they have said that, but again, there's pressure, particularly from the US, for Canada to rethink its positions, and the same now with Britain. There was a piece in the Wall Street Journal a few days ago saying that Britain, which has extensively used Huawei telecommunications equipment and is a very popular market for their phones, should also reconsider it.
How easy would it to unscramble that egg, though?
Well, it would be really difficult, but we're still at the stage of 5G kind of, you know, here in this country just deciding who'll have which bandwidth for it. So it's still relatively early days, and there's different stages. There's core networks where there is great security concern around it, and Huawei wouldn't be a player in that anyway, and more peripheral devices around it.
Right.
But I've written a lot about this, and you know, I guess I've always argued that Huawei should be given a fair go in a market. It's good for Australia. It's good to have a competitive telecommunications market. But if there is evidence of national security concerns, well, then that does obviously have to take precedence. It's a matter of balancing those two concerns.
I mean, you would have thought, though, if China is passing this sort of legislation now to say, you know, don't do this, or saying we have a right to move in and use our companies for our own security purposes, you would have thought that puts them offside as far as Australia's national interests.
Absolutely. In some ways, it's a bit like an own goal in a way. China has declared that it will have the right to do this. I guess from their point of view, what they were saying is that we want the right to go to our corporations and get them and to cooperate.
So
but that is in this market as well as in China, obviously.
So do you think our Foreign Minister, Marise Payne, this will have been on the agenda, and indeed Simon Birmingham up there as well?
Well, it hasn't been talked about publicly, but I wouldn't be at all surprised, because it is, you know, billions and billions and billions of dollars at stake at this, you know, really huge amounts of money. And it may not be on the public agenda, but privately I would be surprised if they didn't talk about it.
Let's stay in the whole sort of espionage and influence space. Kaspersky Labs, which are these incredible labs, they're Russian, aren't they?
That's right.
Now, they're developing something in terms of being able to interfere and manipulate with memories, which sort of conjures up ideas of the Manchurian Candidate.
It conjures up all sorts of things, you know, very dystopian sort of future. Kaspersky is, of course, a big Russian provider of antivirus and cybersecurity, and
he's quite a character, isn't he?
Absolutely. He's been out here a number of times. I've interviewed him. He is a character, and but they've teamed up for this particular research with an Oxford University neurosurgery group, which is doing, I think, wonderful things in the area of deep brain stimulation, where they're looking at how you can help people who have, you know, all sorts of neurological problems, whether it's epilepsy, Parkinson's, people who
loss of memory.
Yeah, and stroke and so on, and Alzheimer's. And we've seen, of course, a lot of technology around the brain. For example, the Americans with their bionic eye, where they've got a variant that communicates right with the visual cortex. It actually bypasses the optic nerve. But there's been research about the what ifs of, you know, if they're going to in 5 years be able to read and decode and write people's memories back, where is this leading us in the future in terms of being able to manipulate people's memories directly?
It's a really interesting space. I don't want to talk about it anymore. Chris Griffith, thank you very much for joining us. Okay, now as the property market softens around apartments and high-end residentials, there's one sector looking more promising, and that's the community residential sector. Affordable living in essentially prefab housing estates. It's a business that is mainstream in the US, but with only 2 major players in Australia. And we'll come back with that story a little after the break.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, we spent a lot of time on air this year talking about energy, haven't we? This incredible trilemma, as the former Energy Minister and now Treasurer Jost Frydenberg used to call it, solving for price and reliability and emissions. Now it's apparently only a dilemma. Emissions will sort themselves out. But there's been much less said about managing demand for energy as a big part of the solution, which would make life cheaper for consumers as well. Well, Richard McIndoe is one of the veterans in the sector. He spent 8 years building up Energy Australia into one of the top utilities, and since 2014 he's been executive chairman at a company called Edge Electrons, whose mission it is to save energy use at both the household and business level. And Richard McIndoe joins me now. Richard, great to talk to you there from Melbourne. Can I ask you first about the overall market, Richard? Kerry Schott has described the energy market as anarchy. Would you agree, and why? How do you see it?
Hi, Ticky. Yeah, I think Kerry used those words a couple of weeks ago at the Financial Review conference, and it's a pretty fair reflection of how a lot of people feel about the market at the moment. There hasn't been great direction from the government. That's very clear. You've got enormous disruption coming in from new technologies, whether that's solar and storage, and you've got the traditional coal-fired generators really hanging on by their fingernails to try and keep themselves alive, whilst this new technology, a new generation, and new storage is coming into the market. So it's a pretty chaotic time, yes.
So we had this week the new Energy Minister, Angus Down Taylor. He's brought in all the big gentailers in, and he has asked for not only the loyalty tax to go on prices, but a down payment in January. Are you confident that he's going to be able to deliver on his promise to Australians that we will get lower retail prices?
Well, he's got a bit of an advantage because the wholesale prices are going to come off a little bit over in 2019. When Hazelwood Power Station really quite suddenly shut down a couple of years ago, that caused shortage in the market, which caused a price spike, which has been working its way through. So there is going to be a softening of wholesale prices, but the challenge that the minister has and that the industry as a whole is the costs of the networks, the poles and wires across Australia, are continuing to go up. And there's very little we can do about that, because the very geography of Australia means it's a widespread, it's the largest electricity network in the world, and per capita that's a pretty high cost. And the challenge that we have is with the new renewable generation and distributed generation model, where you've got solar panels on your roof and storage. You've got to still maintain these poles and wires across the whole of the geography of Australia, and that's expensive.
Yeah, and in fact it's becoming more and more expensive for the mob that actually don't have solar panels on their roofs, and indeed in Victoria this has been acknowledged by, I think, the Daniel Andrews government, who's actually now spending $1.2 billion to help put more solar panels on lower income household roofs, but that's presumably just adding to the problem for the rest of people. Can you explain to me what this is actually doing to the grid, Richard, and the whole idea that the voltage seems to be going up and destabilising things as well?
Yeah, well, it's a very good point you make about solar and the haves and have-nots, and actually we're seeing what is quite a regressive taxation policy in a way, with the people who can't put solar on their rooftops are paying more and more proportionately for their share of the cost of the power grid. The challenge that the power grid has also is that in order to maintain a steady level of supply for everyone across the country, the voltage levels have had to be kept very, very high across Australia. That means that when you tip in the electricity at the substation, the power station, in order for the person at the end of the line to get a minimum level of voltage, the voltage has to be pretty high where it starts. And that means that we've all been forced to consume more electricity, higher voltages than we require. Now, that has two
Is that right? Because I haven't really heard this argument before.
Yes, it's absolutely right. The voltages across Australia run in the high 240, 250 volts. If you go home and look at the bottom of your kettle, it says it runs perfectly well at 220 to 230 volts. So you're being fed 10% more voltage than you require, and that means that you're consuming some 8 to 10% more electricity than you need to. And this is, you extrapolate that out across the whole of the economy, that's an enormous saving that could come from being able to regulate the voltage to a much more stable level. The kind of voltage levels you might see up in Hong Kong or major cities at around 225 volts. That's about 10% less electricity consumption across the economy.
So why hasn't the government seized on this as a major initiative, given, if you're right, that it could actually lead to, a 10% use on the demand management side, less use of power?
Yeah. Well, the debate has been rather captured by the supply side, by the debate between whether it should be coal or renewables, gas, and that's where the political debate has been on supply side. If you look at economies overseas, California is a great example. Since 1990, California has been spending around $800 million a year on energy efficiency and energy saving projects and technology. And over that time, they've saved over $100 billion in terms of energy costs. The European community has got a target of 20% energy reduction by 2020. So overseas, governments have really captured and recognized that reduced energy consumption is actually the way to reduce everyone's bills, but also to bring prices down. If you reduce the demand, then in a supply and demand balance, the price of electricity is going to come down. So,
your business is obviously very much operating in this space. What does, you've got a product that households can buy. What does Solar IQ actually deliver for the average household?
Well, what we have is a small product which acts a little bit like an electricity filter. It reduces the voltage at the point of consumption so that you only take the amount of electricity you need to run your appliances. And the best way to liken it is to, if you looked at the water industry, if you put a spike in the water pipe in the road, the water would shoot up 20 feet in the air, but it flows and a steady flow out of your tap. And actually that's what we do with electricity. We simply slow down the flow of voltage to exactly what is needed to run your appliances, and therefore we reduce your consumption by around 10%.
Right, okay. And what would that cost householders up front compared to what they save over time?
Well, we generally see consumers are paying about $2,200 on average a year for their electricity bill. So we would be saving customers between 8 to 12% there, and for $500 or $600 for a normal house, or $1,000 for a large house, it pays for itself in around 2 to 3 years.
Okay, finally, Simon, can I just ask you quickly, on a bigger scale, there's a transitioning happening. Is the government on the right track to look at firming up renewables as a solution, as a transition method?
I think the firming up of renewables is definitely the way to go, but what I see is actually a greater move towards microgrids, smaller grids, where you have distributed battery and storage that is going to help firm up those renewables in different remote areas. Large-scale nation-building projects like Snowy Hydro 2 are great, but they take a very long time, and the issue is here and now, and I think a combination of distributed generation, distributed storage, and greater energy efficiency for customers is going to be the lowest cost way to maintain a high quality electricity supply.
Richard McKenna, really interesting to talk to you. Thank you very much indeed.
Thanks very much, Ticky.
Well, as the property market softens around apartments and high-end residentials, as I was saying earlier, there's one more sector that's looking a little bit more promising, and that's the community residential sector, affordable living in essentially prefab housing estates. It's a business that is mainstream in the US, but with only two major players in Australia, Ingenia and Gateway. Well, this year, Gateway has been snapped up by one US giant, and this week, having flagged that they were looking for a partner, listed company Ingenia announced a new strategic partnership with another US giant, Sun Communities, which will take a 10% interest in the business. I spoke with Ingenia CEO Simon Owens. Simon Owens, thanks very much for joining us.
Thanks very much for having me.
Ingenia has just announced a pretty big deal.
We have. It's a couple of years in the making, but we've now working with one of the largest manufactured housing and caravan park operators in the world, a US company called Sun Communities.
Yeah.
They're a $10 billion business.
Wow.
They're making a 10% placement into Ingenia, and we've also announced a strategic partnership where we're going to work together to build new manufactured housing or land lease communities.
So this whole concept, this business model, is much more progressed in the US than it is here. Just explain to me what you actually do here. What is the model?
Yeah, and just in the US, around 6% of the population, or 19 million people, live in one of these communities.
Wow.
In Australia, it's probably 150,000. But in our model, it's really targeted at seniors who are looking to downsize, so it's not retirees, it's just people
all over Australia.
All over Australia. Yeah. They're typically selling their family home, they're buying into one of our communities, and typically the saving they're making between selling their home and buying into one of our communities is typically around $150,000. So they're buying the home and then they're renting the land, and what it means.
Right. So they buy the house.
Yep.
Which is. Technically, you could actually move it, I suppose, off if you wanted to, but they don't.
They don't. I mean, has to be, to comply with the legislation, it has to be capable of relocation, but it is quite a challenging process to unstitch the homes and pick them up and move them.
Right, okay, so it's there, but essentially they own the house and then they pay rent on the land.
That's correct.
Which obviously is much lower than renting a house.
That's right. I mean, it's really about monetising some of the savings that seniors have accumulated. What a lot of people probably don't realise is that 78% of people over the age of 65 own their home outright,
yes,
unencumbered, with no mortgage.
Yes, but they haven't got a lot to play with.
They don't have a lot of savings,
right.
and if you're on the pension alone, that is a pretty frugal lifestyle. So by putting $150,000 in the bank, that means you can buy a caravan and tick off the bucket list. You can help the kids out, maybe get into the property market. Or just,
So in terms of, you say this market here at the moment is small, but it's really there's lots of sort of mums and dads businesses doing this sort of thing maybe, but you and Gateway, which has now become wholly owned by another American hometown, you're the two biggest players in the market, is that right?
That's correct. So
okay.
Together we would own about 5% of the market, Ticky.
Yes.
And the top 10 operators in Australia have only 10% of the market. And then beyond that, you've got a lot of mum and dad operators. So I think the sector is, very ripe for consolidation. Okay.
What are the chances of you being fully taken over? Got to ask you.
Oh, look, I mean, that's a fair question. And as a listed company, that's one of the, I mean, if someone sees more value in you than your current shareholders.
Yes.
There's a standstill agreement with Sun Communities for the first 18 months. So they now own 10% of the company. After 3 months, they can creep up to 13.5%. And after 18 months, I guess it's up to them. But, our shareholders are very supportive.
Yes.
We already have a couple of shareholders who own over 10% of the business. So,
well, the market seems pretty happy with this news.
Yeah, the stock price is re-rated, very nicely, and the price that Sun's paid to get onto our register also represents an 8.75% premium to the
So before the news of Sun arriving, the share price had come off a bit. Was that reflecting the softer market, do you think?
Yeah, I think there's quite a bit of nervousness out there about what's going on with the residential market. Interestingly, in October we had our strongest month ever for sales. So we are, we're really playing at the really affordable end of the market, and I think a lot of the weakness that you're seeing is in inner city apartments, in some markets at the top end of the market.
Yeah, well, the apartment market is really patchy, isn't it?
Yeah.
And do you see a lot of difference around the state and around the country?
Yeah, so Ingenia's currently selling homes in 10 different geographic markets, ranging from down near Avalon Airport just outside Melbourne, right up to up near Hervey Bay on the Queensland Fraser Coast.
Yes.
So yeah, the markets are operating at different speeds. We would see markets like Port Stephens and Coffs Harbour on the New South Wales mid-north coast are very strong.
Yes. And do you actually manufacture as well? Manufacture these? How long does it take to manufacture one of these houses?
Yeah, so we have two different styles of homes. We have some factory-built homes,
yes,
which we transport to site on the back of a truck. They typically take about 8 weeks to build. And then we've got some site-built homes, using traditional home builders. And those homes sit on a steel chassis, which again can be capable of relocated.
And are you adapting at the moment now to the slightly softer market? Yeah,
so in Brisbane in particular, where we are seeing a little bit of softness, in the past seniors have wanted 3 bedrooms, double garage, Caesar stone bench tops. So we're
people are tightening the belts a bit.
Yeah, not significantly, but we're just looking to find a way, working with our builders, if we can take $5,000 to $10,000 out of the home cost. So that may be, instead of the 3rd bedroom, it's a study nook. Instead of 2-pack poly finish on the cupboards, it's a more traditional finish, or we might be taking the stone bench tops out.
So looking forward from your investors' point of view, you are seeing growth though in the market.
Oh, absolutely.
Yeah.
I mean, a number of our properties we can't actually build the homes quick enough.
Yeah.
What we're seeing is this senior tsunami coming through. People who are retiring or dead. Not necessarily retiring, but they might be moving from full-time to part-time, but they want to free up cash flow.
And the volume of your rentals, I suppose.
Yeah, that's right.
Is how the model works.
So it's demand's very strong, and this is a relatively new concept in Australia. Penetration rates are very low compared to the US.
Yeah. And are you paying dividends?
We are paying dividends. Our yield at the moment is around 4%. But we're I guess in the infancy of growth, so it's a very capital-intensive business, and we've said to our shareholders, so last year profit grew it by 50%, but our dividend growth at the moment is only around 15% per annum, and the rest of the cash flow is being reinvested back into the business, either buying more land or buying existing communities. So
with a bit of help from Sun now.
Yes, Sun's got very deep pockets, but I also think we've spoken to a lot of sovereign wealth funds about capital partnering and other groups, but what really impressed us with Sun is they've been in the industry for 40 years. They've got great intellectual property. We're going to work with them on lowering our home costs even further. And one of the opportunities that we see is really compelling is, at the moment, you can't get finance against these homes, whereas in the US you can. Warren Buffett's the biggest lender to this sector in the US. So there's sort of a number of sector adjacencies that we're really excited to be exploring with Sun. Well,
Simon, we'll keep an eye on all of this. Thank you very much for joining us.
Thanks very much for having me, Ticky.
Oh boy, another big week on the markets with the midterms in the US and AGM at CBA, and news that the APA bid was knocked back by the Treasurer, and also corporate travel under siege, of course. Michael McCarthy from CMC Markets joined me earlier to talk the week in markets. Michael McCarthy, very nice to have you back.
Thank you.
Now, we've settled after the midterms. A lot of takeover activity one way or another. APA, first of all. We've had the Treasurer knock back CKI. How does that leave APA shareholders?
concerned and a little bit hurt this week.
Oh, but they must have known. How could that possibly have gone through?
Well, they definitely did, because the bid was at $11 and the share price didn't get anywhere near that. I think the high was around $10.40. So there was always doubt about approval for this deal, clearly expressed by that share price move. But the reaction since was perhaps a little overdone, because there is real cash flowing through these pipelines.
And maybe other people sniffing around. IFM?
Absolutely. And it's not impossible that CKI could form another consortium where they're not the lead but have a stake and come back to the table. They're clearly very interested in the assets.
Yeah, and Mick McCormack may or may not stay around if that came through. Who knew?
Wow.
He seemed very happy whichever way.
I think that's a poker face, Ticky.
That's true. Now, of course, the other big deal which did get approval by the ACCC this time was the 9 Fairfax deal.
Fascinating share market reaction to this one, Ticky. Initial response was positive, as you would expect. They're bringing it together. However, in the subsequent trading sessions, both share prices have sunk. And I think
why would that be?
I think it reflects the reality. A lot of analysts see this as the lashing together of two lifeboats. Essentially, both of these businesses have big problems, and although they're dealing with them in different ways,
they can't make one more big, efficient lifeboat.
Well, maybe there's a big flotation device in there called Domain, and that will keep them both afloat for quite some time. And Stan could well turn into an important business for Nine. So there are potential opportunities here, but at the moment, given their legacy businesses are struggling still, it's a merger of necessity.
All right. What have we heard from the big banks this week?
So we heard from Westpac on Monday. Surprisingly, they were able to increase their net interest margin by a couple of basis points, and their full-year profit was up by 1% on an operating basis. So underlying business going okay.
They decreased their executive pay.
Exactly. Well, that's going to help on the bottom line. That's a significant expense. But they also flagged a very cautious outlook, and that seems absolutely right at the moment. There's a lot of uncertainty about the next 2 years for banks in particular, and structural change, I believe, is still on the cards after we hear from the Commissioner in February or March. So the management were rightly cautious. However, investors appeared impressed. The share price has risen substantially, up by about 6% over the course of the week, and it's outperforming the market. Interesting,
at the CBA AGM, Catherine Livingstone, the chair, really acknowledging that the bank was focusing too much on profits at the expense of the customer. That was quite a observation, really.
Well, in a quarter when you have to announce that your net interest margin has declined the day after one of your major competitors has shown expansion, that might be in the category of that's what they would say.
Yes.
But nonetheless, I think that reflects the reality, and they talked about the increased capital costs. They've got their Tier 1 capital in at 10%, but they see further costs coming from a need for increased capital, along with all the other costs that we haven't quantified but know about. So once again, a very cautious outlook. That's the right thing at this stage of the cycle.
And I should just add, we've got news that Woolworths is offloading its petrol business to EG Group for $1.7 billion. That's just coming through on the wires. So, after the break, checking in on Asian markets with Fidelity's Catherine Young.
Now, back to Ticky.
Welcome back. Moving now to Asian markets, and Alibaba's Singles Day on Sunday is eagerly awaited by shoppers and investors around the world. For more on what to expect, Catherine Young, Investment Director at Fidelity International, joins me now live from Hong Kong. Catherine, are we going to break new records again?
Very likely, and the consumption story really is still very much intact when it comes to the rise of the Chinese consumer. We're interested to see the breakdown of the kind of goods and also the logistics around the delivery. So yeah, again, it's quite a big event. Most shoppers are eagerly awaiting the specials for that 24-hour period.
Yeah, well, very interesting. We've sent our young reporter, Leo Shanahan, up there, so no doubt he'll come back with all the information. More broadly, Catherine, the relationship between China and the US, now that we've had the midterms come through, presumably all eyes are going to be focused on the trade relationship and what might or might happen at the G20 in South America.
Well, exactly. And, you know, all year we've been talking about this uncertainty, this negative sentiment that's weighing on the markets. Is it already priced into the Chinese equities market? Is it not priced into the US market? At the end of the day, though, we do expect to see some kind of resolution at some point, a resolution that very much struck between President Xi Jinping and obviously President Trump. In the meantime, though, this continues to be an overhang. And whilst this is a broad overhang, what the market's very much been focusing on today are the earnings reports.
Right, okay. Any news?
Well, getting back to the earnings, one consumer-related name, and so what they do, they're an online travel company. They came out with weaker margins last night, and the stock was down 19%. This then had a knock-on effect into the likes of names such as Tencent, so the big Chinese tech company. We also have the weight of oil. So people are talking about the oil price now entering bear market territory. When it comes to earnings, if we look back at the beginning of last year, we saw big upward revisions in two sectors, tech as well as energy. So we're probably going to see more downward numbers or downward revisions in this space. So for example, in tech, earnings estimates at the moment around 3-5% versus 20% last year, or for 2018, like forward looking for 2019. And when it comes to energy, they were like 60% upward, and that's probably going to be revised down to more like 7% for 2019.
Right, okay, interesting. C-Trip, as you were saying, down 19% on that weak margin outlook. Can I take you back up to sort of macro again? Really interesting that we've got the United States still on that trajectory of rate rises. Meanwhile, what is China up to, and how is that going to work?
Well, people and commentators, investors are talking about potentially that the biggest risk now for the US is over-tightening. In China, the biggest risk, especially in this quarter, is overstimulating. So whilst the government keeps on talking about turning sentiment around positively, fiscal tweaking here and there, they are cautious in terms of not overstimulating. In the area, I mean, don't forget with China, the property market's still the backbone of the economy, and whilst the property market continues to do very, very well, even if we start seeing a down cycle, there are question marks around how much the government can actually stimulate in this area because of, again, this risk of overstimulating.
Right, okay. Well, Catherine Young, great to talk. Have a good Singles Day, and we'll join you again soon.
Thank you.
And that's all for the show tonight. See you on Monday at 5 p.m. on free-to-air channel 95, or tonight on Catch Up at 8 p.m. on Foxtel's channel 604. Thanks for your company.